All right, a new month is here, and we are getting a look at how the stock market fared. And while many people have been complaining about the markets, July was actually a really good month in the markets. They went up. Here to talk about that is our 9 News financial advisor, Bruce Allen of Bruce G. Allen Investments. Good to see you.
You too. Good morning.
Thanks for coming back. So the markets, everybody's been complaining about them, but they were up roughly 9% in July, and that's pretty good, right?
Yeah, we've had since June 30th, the markets are up about 9.2% in July, a very good July, and as of today, they're up almost 10%.
So what's behind that?
A couple of things. The first piece is what's going on in the bond market. Long-term interest rates peaked on June 14th. The 10-year Treasury bond, which is the Dow Jones Industrial Average of the bond market, hit a yield of 3.47, almost 3.5%. And since that time, yields have been coming down. Many institutions are believing we may have a recession, and they're locking up long-term yields, and those yields are now down to 2.71%. So as the interest rates have come down, the stock market has really liked that.
How are bonds doing? I mean, a lot of people started putting money in bonds when the market was fluctuating so much.
Bonds since June 14th have been doing pretty well. Up until that time, they'd had one of the biggest declines since 1981. Since that time, we've seen a pretty significant rally both in bonds and then subsequently in stocks. So we've seen a pretty good market since June 14th, since the peak in yields. So
we've talked many times about how brutal the market was earlier this summer because of Ukraine and because of inflation and coming out of COVID and all that kind of stuff. What should investors do now that things are looking a little bit better?
I think there's a couple of things. One is that investors now can have an opportunity if they need to lighten up on stocks. They can sit down and talk with their investment advisors and say, hey, am I out of balance with my financial plan? Because the markets have really rallied significantly since the middle to end of June. And so the markets are giving people who are heavy in stocks a chance to lighten up a little bit if they want to. For a lot of other investors, it's just stay the course and keep doing what you're doing.
Now, are there any sectors that are doing better than others, or are they all?
So far this year, energy stocks have been on fire. They have really been the leaders, and we've also seen defense stocks do very well. So those are the two sectors so far that have done well. Having said that, crude prices have really come down, and I think they broke below $90 a barrel for the first time since Ukraine was invaded. So we may see those sell off a little bit. But those have been the two hot sectors so far this year. We've seen really good moves in those, whereas everybody else has suffered in terms of the stock market.
Yeah, it's the motto of all you guys, stay the course, right?
Yes, all us guys, and all us girls. So I think that the key thing really is that if we see that typically if investors stay the course, they tend to do better over time, even through these difficult environments. However, if you have a portfolio which has a balance of stocks and bonds, you may be heavier in stocks right now than in bonds because of this recent market run-up. Maybe an opportunity to lighten up a little bit.
Okay. All right. Good advice as always. Bruce, nice to see you.
You too, Gary.
All right. Thanks.